Okay, all right. Dipan, we have many more questions for you, but just stay on. We're actually 1 minute away from the pre-opening rates. Not that it's going to be any big bang move today. We're expecting a quiet opening, but Siddarth Bhamre is joining in now to give us his views. It's the start of a brand new series as well. Siddarth, hi, good morning. Give us a little bit of a bird's eye view on how you see things stacked up as we head into the new year. Do you think, it has been volatile last few weeks, but what kind of a visible trend are you noticing right now?
Good morning, Sonia. So, to answer to that question, we need to dwell into the rollover stats, Sonia, that what exactly has happened and where, the interest lies. So, Nifty open interest has declined a bit and rollovers are slightly less, around 78-79%. But that's not a problem because Nifty didn't see any major formation of long or shorts. So, declining open interest is just declining exposure and you don't make, a negative story out of it. Where is the negative data is Bank Nifty, where we have seen open interest rising by, a paltry 1.5–2%. But there was a decent amount of shorts which got formed in last series in Bank Nifty, and those have got rolled over because rollover percentage is also high, around 85%, which means that the participants are anticipating that the Bank Nifty underperformance might continue. And even if you look at the components, as we were discussing yesterday also, and Anuj was talking to Dipen right now, that how Kotak Bank, IndusInd Bank are two pain spot in Bank Nifty. But if you look at the larger picture, are there shorts in HDFC Bank, ICICI Bank, Axis Bank? Answer to that is no. They have corrected because of long unwinding. And it's a basic thumb rule that any underlying which corrects because of unwinding, it's not in a bearish trend. So we should wait and see how bigger and heavyweight names like HDFC Bank, ICICI and Axis react to gauge that how Bank Nifty would move. And even you can add a larger stock over there is Reliance Industry. There too, correction is not backed by any fresh formation of shorts. It is just long unwinding. So these heavyweights are correcting because of long unwinding. And then you look at other heavyweights. IT is doing well. If you look at TCS and Infosys, the rollovers are good. There has been short covering. The other heavyweights like Wipro, SCL Tech, they are going up because of formation of long position. L&T is doing good. So yes, we are in a corrective market. We are still not in a bearish market. And this will be a stock-specific market for some time to come. People should realize that last few months when they made money by going long, no matter what you're buying was going up. Last 1 month, everything was coming down. You made decent money. But you are heading into a period where market will not give you much momentum and you will have to put a lot of efforts to identify stocks which will give you a decent return. So I think we are heading in a market maybe for a 1 to 3 months where there will be a lot of stock-specific activity and index would not give you much of movement. So it would be a challenging period for people who have been relying on broader trend rather than identifying stocks.
Okay. All right, Siddarth, we'll leave it at that today. Thanks very much for your overall outlook on how we're looking at the new expiry, the new series actually picking up. Thanks for joining in. Well, with that, let's move on. It has been